We hear a great deal about the credit binge in advanced economies that helped lay the foundation for the 2008 financial crisis and is also widely blamed for holding back the pace of the recovery. Well, while the West has been unwinding some of this excess borrowing in recent years, emerging markets have been seeing their own credit boom. And it's a huge risk, particularly in China, where growth has normally pushed along the economies of several other countries. Growth is slowing in China and its debt overhang is growing as a result. That's a problem because countries ought to be able to grow their way out of debt. But that era may be coming to an end. And now China has a developing real estate crash of its own. China and Hong Kong are the chief countries that have seen corporate and household debt surging as a percent of GDP. Since 2008, they have seen private sector debt to GDP increase by a staggering 78.2% and 105.2%, respectively. This while the global economy has been held back by sluggish growth in developed markets, which have struggled to bounce back from the crisis in the way that many economists had expected. Chronic overinvestment in the property market for more than a decade has left a huge overhang of stock, leading to a sharp downturn in the sector. Sales fell by 10.8% over the first 9 months of 2014, according to the country's National Bureau of Statistics. This has led to new investment in property, a good guide for the market's expectation of its future growth potential, falling sharply. A weakening property market could drag down China's growth and pose significant risk to local government balance sheets in the country, which rely heavily on land sales to developers for revenues. The value of land sales is falling off a cliff. The problems are likely to weigh on Chinese growth and put pressure on the government to bail out local authorities. Slower growth is likely to put pressure on countries that do a lot of business with China and have seen corporate and household borrowing increase sharply in recent years as expected revenues fail to materialize.